welcome to the panel on deep technology. You know, we have several panelists, so we have a little over half an hour. So with that, we're going to jump right into the meat of the topic. We're going to avoid spending time on background.
Eric,
assume that
you've got 50 minutes.
50 minutes. Okay,
yeah.
Good. Well, all of us are available through our favorite search engines. So we're going to work to minimize the time we might spend proving to you that we are the perfect group to be talking about deep technology. If you keep your Zoom chat window available, some links you might find to be helpful there, providing background on the panelists that I'll shoot in as people talk. But so with, as Marty said, deep tech allowing for interpretation, I'm going to start with a real world example just to set the context under which you'll hear from the rest of the panelists. So I represent the first spin out of MIT, of their math department, to have the institutes tell it. You know, math is really nothing more deep than or fundamental than math. How this discovery in mathematics takes expression in a commercial enterprise found itself through Uber, through your favorite ride-sharing program, which for all intents and purposes has an infinite balance sheet to develop an ideal data infrastructure and some of the smartest people on planet to implement that data infrastructure. But they don't have the perfect data infrastructure, and this impairs their ability to make business decisions. They do this because they're focused on growing the business. Like every other business in the world, they're not focused on having a perfect data infrastructure, they're focused on growing the business. How this found expression at Uber is they grew up in a sort of federated IT environment by jurisdiction, by city. And this then resulted in worse business decisions because they would have to make the analysis by, say, the San Francisco Bay Area and then another for Los Angeles, and they would have to do statistical comparisons between those two cities. They couldn't, for example, do the analysis for supply demand or how the weather affects driver satisfaction across the whole state of California, let alone the whole US or the whole world. They looked around the world and found, how do we solve this problem? And from the panel description of deep technology, it comes from something deeper than us just being brilliant computer scientists. It came from math. In this particular domain of math that they found to solve the problem was it something other than set theory or graph theory. It's in categorical mathematics, category theory. We happen to be the leading software expression, enterprise software expression for that discovery in math. Our software helps solve that problem, which helps them make better business decisions, quantified on a few $1 million a year. I think the number was 4. And on any business, especially a small margin business like Uber, that matters a great deal. That's an example of deep technology providing some real world commercial benefit. And that provides a context under which we're going to talk for the whole panel today. We're going to try to get everybody's perspective a couple of times, but I'm going to start off with Bala. He's also an operator. You can talk a little bit about your company and maybe get into your perspective, Bala, on deep tech.
Thanks, Eric, and thanks, Marty, for the invite, and thanks for the opportunity to talk. So I'm Bala Cuddalore. I'm the founder and CEO of nlightn Technologies, and what we're about is actually putting a data scientist in the hands of every business leader so that they can actually empower their organizations to achieve their targets and work towards their target more effectively, rather than traditional BI and analytical tools. So we're like the next generation of analytical tools that we're developing as a platform. So when it comes to deep tech and where I see a lot of disruption going on is by the fact that 3 emergent technologies are going to collide and converge in the near future. And what I mean by that is we have 5G, IoT sensors, and then edge computing. And those are the 3 emerging technologies that are going to drive this next wave or disruption in the data space and the AI space, and AI being in the center of it all. So what I mean by that is that, if you're looking at 5G, this is an emerging thing that, that's promising in terms of the amount of bandwidth that it can offer to push, sort of video images or even data, right? And then you're talking about the proliferation of all the IoT sensors that we're seeing within industries, within factories and warehouses and so on and so forth, that is going to bring about a lot of data that is being captured. And given the fact that 5G provides the bandwidth, we're going to be able to push all this volume and velocity of data through these bandwidth that we have from 5G to do the analysis and do sort of prescriptions and recommendations to any industry or any vertical they might be. And what happens in sense is because of the volume of the data and the availability of the bandwidth, what we're going to see is that edge computing is going to be pushed to the forefront to be able to reduce the latency between how the data is captured and it's actually pushed to the cloud, in a shorter manner, so that the majority of the time can be used to actually compute and analyze the data, with AI being again in the center of it. And once that is done, then the question becomes, how is that again pushed back into the mobile devices that actually can be the receptacle for taking the recommendations or the prescription and act on it. And I'll give you a classic, sort of day-to-day, sort of experience. So during the COVID outbreak last year, we saw some peaks during the fall and winter timeframe, wherein, there was acute shortage of hospital beds. And the EMR ambulances were actually going from hospital to hospital with a patient, sort of desperate for medical attention, only to be turned away from the hospital that, the beds weren't available. And so what if, the sensors were available on the bed that could actually sort of sense the bed being occupied and then beam that to the cloud, let's say. And from there, from the ambulance, if the information about the patient's, severity is actually also pushed back into the cloud. And once the computation is done in the cloud and can be pushed back to say that one customer or a patient can actually reach this ambulance in time to, sort of get that life-saving support, as opposed to another ambulance, which is probably not requiring that, sort of attention at the same time, can be actually pushed to another hospital, and then, also avoid these kind of bottlenecks or shortages, and overcome that by doing some kind of creating a life-saving event. So that is how I see these three sort of emerging technologies collide to be able to sort of create this disruption in the big data space.
Thanks, Bala. That's terrific. Niall, how about you talking about AI innovating around virtual digital twins, manufacturing, aerospace, and the building of city management?
Yeah. So Niall McSheffrey, a founder of Elementz Ventures. We're a new fund investing in early stage software technology or software-enabled startups, US and around Southeast Asia. Really, we're pretty agnostic as far as the stuff we look at, but we have an affinity for AI B2B solutions, and especially on the enterprise side. I was an operator for about 12 years. And we built a lot of enterprise products. And what's really interesting is to see the evolution of where the computing has gone in the last 5 years, even in the last year, where the power of computing, Bala talked about the edge computing and the ability to virtualize absolutely almost every environment around is empowering a whole crop of new startups. And we want to find those startups and we want to invest in them. Instead of using your computer power to mine crypto, why not solve manufacturing issues with an entire factory with that kind of same power? Or use the AI that is rapidly becoming available to even the novice startup guys to be able to solve some of these problems. And I think what's cool is those problems are enormous. I mean, they really are out there. A couple of examples I'll give you is Shanghai is basically, in China, has used digital twin, which really is a virtualization of an entire ecosystem using computing power to model their transportation system and to model their buildings. Even drilling down further, there's a startup up in Toronto that's using digital twins to model hospital environments. So let's take the IoT sensors in a hospital. Let's take some of the computing systems. Let's take even the management of the staffing and all the different utilities that are part of that hospital. And let's build a virtual model of that hospital to improve efficiency. And they have actually proposed this startup that we know up in Toronto. They say they can save 88 cents per square foot by just modeling this environment virtually from top to bottom. Now, I think there's other applications here that would be quite interesting. That's a lot of corporations are doing, like in aerospace and in hotel management. And what we think is, even a hotel could take every aspect of their business from their IoT sensor, their booking system, their cleaning, you know, all the different aspects of hospitality, put that all into a business intelligence environment, and build a program to manage that aspect of it. Honestly, I haven't seen one out there yet, a hotel group that's doing it, but we see the opportunity certainly with edge computing, and certainly you could see the same thing, you know, all the way up to modeling an airplane engine and a fan blade or a little component of an airplane engine to see when it would fail, when should you change it, when should you inspect it. So those are the kind of things we want to see. Those are the things we're looking at. So, you know, it's a very exciting time, I think, for us.
Thanks, Niall. Jack, I know you have something about this to say with your big co-founder and CEO of Nightingale Securities.
Yes, sorry about that. Yeah, we've been around since 2014, and we basically operate an autonomous drone company using proprietary robotics technology to address the physical security market. We focus on enterprise, defense, and emergency response as our primary market segments. Typical locations are, you know, storage facilities, pharmaceutical research, mining, energy generation, military installations, and other critical infrastructures. And we've been using, you know, just basic computer vision and deep learning technology to make our platform more and more intelligent. So basically, we believe that robots have to be taught, and we're in the early stage of their education. So they're still in primary school. The more they fly, the more data they collect, the more data they have to learn. So the more learning material that we gather, the more intelligent the system becomes, the more value we can deliver to our customers. Since the beginning of 2021, we're seeing increasing traction in all segments. Our customers' reason for adoption ranges from cost reduction, capability augmentation, making coverage of large area economically feasible and practical, or being a force multiplier by enhancing their existing security posture by doing the job cheaper, better, and faster. So,
Thanks a lot, Jack. Nick, I know you have something to say about this in a different domain of deep tech, deep into the oceans. So maybe you want to talk about that.
Yeah, absolutely. My name is Nick Larson, general partner at Driven Capital. The website's driven.capital if you want to check us out. There's some pretty interesting applications with a focus on sustainability, right? Because that's going to be crucial for a lot of buyers. This is on land, but there's some interesting applications within the ocean as well. So think about, like, if we're gonna, the seed germination process, if we're going to be growing plants, for example, like cannabis, that takes 6 weeks for a seed to germinate. However, there's really cool companies in deep tech called Agrisonics that we're taking a look at. Essentially what they're doing is they're using sound waves to speed up the seed germination process from 6 weeks down to just a couple hours. And the technology is fascinating. Essentially how it works is plants, right? You need to get nutrients that go from point A to point B. But what they do is they use patented sound technology, and there's white papers on this as well, to essentially widen the plant's cellular hallways so nutrients can get distributed much more efficiently. But I think that's super fascinating to learn from nature and then apply in real world applications. Like to your point, how we're able to, and this is kind of more on the biosciences space, but being able to crossbreed polyps, which is the real critter in the coral reefs, to be less susceptible to warmer waters. So they're actually able to regrow the coral reef, and then on top of that, play the sounds of a healthy reef underwater, and that attracts 50% more fish. So I really like the idea of focus on sustainability and rebuilding these reefs, but also for the sound technology for agriphonics as well. Some pretty cool stuff that they're doing.
Terrific. Thank you very much, Nick. Tarek, you have some perspectives on space. So you're going deep in another way. We went to the oceans, now we're going up. Tell me how your perspective of deep tech.
Thank you, Eric. So yeah, I'm Tarek Waked, managing partner of Type 1 Ventures. We invest in anything that makes humanity multiplanetary species. And when you look at that, it's not just space. So we do space, robotics, AI, a lot of the deep tech areas, but our main focus right now is space. Some of the companies we've invested out of Fund 1 include a space plane that's going to enable a next run in space tourism, takes off from a runway, lands on a runway, and it'll take people up to space at a high cadence. You're going to start to see private space station like with the likes of Axiom Space. Then you also have commercial applications. We just led the seed round to Space Forge. They're an in-space manufacturing company based out of the UK. And what they essentially do is they enable a lot of other technologies here on Earth that benefit Earth. When you look at in-space manufacturing, take a lot of the dirty industries that you have here on Earth, you could actually manufacture in orbit. With the launch costs coming down, it's going to enable a whole new wave of technologies moving forward. But specifically Space Forge, what they do is they manufacture semiconductor chips in space that are much more efficient than the ones made here on Earth. And because of launch costs coming down and some of their proprietary technologies, they can make them at a more effective cost. So you're seeing a convergence that you have not seen historically before around space. Little tidbit is there's more satellites launched in the last couple of years than in all of history. And that's just going to continue to increase exponentially. So what we do as a firm is we support these companies from a business standpoint. We help them, find their customers, help them scale their teams, and also marketing. You're starting to see a lot of push on marketing around space. You see it on commercials, you see it on like movies. We just did a consumer project where we bought payload on a lander going to the moon, and we sold over $1 million in photos to land physically on the moon. We sold photos for $10 a slot, and we did pretty well on that one. So we have Fund 1, we're raising Fund 2 next year, and happy to answer any questions around space and how we see it moving forward. I personally want to move to Mars. That's the only reason I'm doing this.
Thanks, Tarek. Our last panelist today, Sahil, tell us, you have some great stories about where we might be looking for opportunities in deep tech. We went deep, we went into space. We're going to come back in the terrestrial domain and see what's deep.
Awesome. Well, thanks so much, Eric, and thanks to everyone here. Fascinating discussion that we've been having here, touching so many different domains. So at Fourth Realm, we think about deep tech in a wide variety of arrays. I think one of the most pressing problems that we've seen for our society here is really touching on deep fakes, the prominence of synthetic media, and just seeing how easily misinformation can spread and impact our society. And as the sophistication around these attacks becomes more sophisticated, we're starting to really see the impact of how some convincing videos that go from a fake Tom Cruise on TikTok would start to implicate world leaders and real intentions and have real consequences on everyday life, or even impersonate one of us, and what sort of recourse would we have? And so we've really been investigating deep here in terms of what are the techniques and ways to combat deep fakes, and think around how do you start to form a trusted or neutral third-party approach, given that a lot of large tech companies have traditionally faced many difficulties when finding the right balance between monetization of their news feeds for many social media companies, as well as thinking around how to balance the user experience and make an experience that rewards people and also provides them things that would be more useful rather than something that just allows them to click through and click on onto more ads. I think another real pressing problem comes from really understanding the core use cases around where else this technology could be applied, thinking around how to combat fraud online in terms of identity theft, thinking around different use cases for even other consumer apps in terms of impersonating users, being able to socially engineer their data and gain access through customer support. I think the way that we think around our identities online and how we store and secure our information is only going to become that much more critical. And lastly, I think what I'll say here is really thinking around some of the long-term implications in terms of how we think around safety, security, and how do we want to communicate online. Thanks so much.
Perfect, Sahil. Thank you very much. So we're now going to move into some views from the broader audience after we've got to express what we think about deep tech. We're getting some questions just about the way in which we can think about deep tech. So we have an issue about timing. We have an issue about growth rates. We're going to address issues about technical risk versus market risk. And I'll start by giving another example of deep tech in action during the COVID crisis, where we ran across this logistics company, and I didn't realize how big some of these logistics companies were. We had there's a big company in the U.S. that had tens of thousands of employees, and they had one of their customers also had tens of thousands of employees that managed ships around the world. Each one of those ships has tens of thousands of these shipping containers, and the presenting issue was, where's my personal protective equipment? Where's my PPE? And does that go to Shanghai or does it go to Santiago? Where is it? You'd think this would be a really, perhaps an easy question, but it's actually not, because the rate of growth we have of not just data, but data relationships impairs the ability to make these fundamental easy decisions. So the business itself asks these questions: where's my stuff? Where's my customer's stuff? And the friction will often result in a couple of day delay. You can't have an agile business doing that sort of thing. That growth of businesses just continuing, and there's like we said, a phase change between millions of data points, millions of relationships, to billions or trillions. That is a fundamentally different world that's emerging that requires some of the deep tech we're talking about. So we'll open this up to the rest of the panel about who wants to take the question first. We'll talk about with growth. What's the growth in these particular markets? Who wants to talk about the growth of a particular sector? Niall, I saw you.
Sure, I can tell you. So this is just the manufacturing side of digital twins. It's actually relatively small right now, probably about a $5 billion marketplace. It'll grow to about $100 billion in the next 4 years. That's just the manufacturing. Doesn't include buildings, IoT, hotels, hospitals. That's just in manufacturing. So the growth rate, 42% a year in the last 2 years, and so we're expecting that to jump significantly. So that just means the opportunities are there. And I would say in logistics, as you're talking about the example as well, there's all kinds of other technologies coming in to track logistics, where you see serialization of products, not necessarily blockchain solutions, but simple just serialization, where you can identify where every product is based on a code. Those kinds of things are definitely coming up.
Terrific. Thanks, Niall. Who wants to take that next? Tarek.
I can talk about the growth of the industry of space specifically. If you look at the ISS, for example, the cost to actually take that up is dependent on how much it costs to launch into space. And I think that was going into another one of the questions, but in the 80s and the 90s, it cost between $85,000 to $25,000 per kilogram. With the advent of, SpaceX's Falcon Heavy, it's gotten to about $950 per kilogram. And now with Starship, you're going to bring that cost down to tens of dollars per kilogram to send essentially mass objects into space. So if you look at the reason why NASA is so expensive, and a lot of these launch companies and companies that do research up there are so prohibitive for entry, it's because every component on a satellite or in a mission has to be thoroughly tested, and you can't innovate around components. You can't use off-the-shelf components. So what ends up happening is you have these like big, heavy, not maneuverable machinery when it comes from a cost perspective. And now because if the mission fails, you lose billions of dollars. So what now is happening is you can send stuff up and use off-the-shelf components, so business is accessible. You're going to have multiple space stations, and then from there, you're going to have people actually interacting with those, and businesses interacting with those space stations. You're going to have people actually going to the moon. Like, a lot of people think that's kind of far out there, but when it comes from a business perspective, there's a lot of companies that are actually generating revenue and actually have a use case here on Earth today.
Perfect. Thanks, Tarek. Who wants to take the question about the sector growth? Yeah, Jack.
Yeah, so I just want to say first, Tarek, I also want to move to Mars. That's actually why I'm doing this robotics company, because I do believe that there's some basic foundational robotics technology that need to be solved, and we need to create a market for it in order for us to be able to accumulate enough capital and utilize mature technology to go to Mars. Personally, for our particular market segment in physical security, the guard cost in physical security in 2019 was $44 billion. And that's according to SIA, Security Industry Association, which is the largest executive association for the physical security industry. That's larger than most defense budgets, around the world. Now, we can't address all of that, but for exterior guards that are doing perimeter patrol for large areas that's greater than 50 acres, the market for that is still very vast. We estimate the market for that to be about 5.4 billion out of the total 44 that is actually addressable today. Now, when it comes to actually addressing that market, the technology is relatively new. So we've gone through a couple years of education, and that education period coupled with regulatory support from the FAA that's providing waivers. Some are getting more and more generous. And with NASA also participating in unmanned traffic management and other projects that are making commercial drones, eventually manned and unmanned, available, we see a really bright future. Our customer base are companies like Lockheed, Siemens, Sanofi. We're currently patrolling one of their vaccine production facilities in the Poconos Mountains. That's where the CDC actually has a virus vault. So that's pretty serious business for us right now. We also work with the U.S. Air Force. And these are all just new business, that we've acquired recently. The U.S. Air Force wants us to provide security for Air Force bases or some of their forward operating bases. The first base that we are operating at will have nuclear weapons. Their motto is excellence in nuclear warfare. Now, I don't know what that means because I don't think it's really excellent to have nuclear weapons at all. But that said, that's where we're at. So we're trusted with the responsibility of guarding a lot of these critical infrastructures. LA Department of Water and Power, for instance, they have 30 sites. I just got an email 2 days ago basically telling me that, hey, we purchased 2 systems right now. So that will cover 2 sites. We want to write checks for the other 28 as well. So, our system is priced at $85,000 a piece, plus $16,000 annual recurring maintenance, repair, and upgrade, or MRU, plus $7,500 in deployment fee. Or they can sign a deal for $4,500 a month and do a 3-year deal. Our margins are anywhere between 55 to 65% right now, gross margin. So,
hey, Jack, I had a question for you.
Sure.
From a robotics perspective, there's vision, mobility, and manipulation. Which one do you think presents the biggest challenge and the biggest opportunity in your space?
I think, they're all very challenging. Localization, so SLAM. So it's a big problem. So the ability for a robot to be able to recognize where it is and be able to maneuver around obstacles, that's actually something that we're currently solving, and we're working with the U.S. Air Force to apply a tiny software-defined radar on our drone. It will be the first in the world to have a software-defined radar on a small UAS that's only about 12 pounds. And that will enable us to fly 50 miles per hour, dodging trees and buildings. And we're also doing terrain following. So imagine 1,000 of these things flying simultaneously, swooping, surprising the enemy and landing at their airfields. So rather than destroying the enemy's assets or killing people, you will occupy a specific area. There's 1,000 of these things. You have to disarm 1,000 IEDs. You can't do that successfully. And then when everything is cool, we fly out of there and we're done. So no one gets hurt. So these are some of the concepts that we're talking to the DoD, and we're exploring some of the foundational technologies. Just a reminder, we're still in the early stage. We're selling a product mostly for commercial defense, but we're still in the early stage. There's still a lot of technical challenges, involved, which means there are a lot of opportunities.
Thanks, Jack. It looks like something I could give my credit card for, though, right now. You're already giving me pricing. That's very nice.
Sounds good.
Paula, how about sector growth? How do you and your firm think about the growth in your sector?
Yeah, so if you look at some of the converging technologies that I talked about, there's definitely so edge computing, which is about 4.5 billion or so, and then there is IoT, which is about 1.4 trillion is what they say. And if you look at analytics and data science and those kind of tools, the market is about 30 to 40 billion in terms of size.
Okay. Good. Sahil, do you have anything you want to say about sector growth? You're covering quite a few different sectors.
Yeah, sure. I think naturally there's some market segments that are much more developed there. If we think about self-driving cars or autonomous vehicles, we've seen over $100 billion flooded into this market, talking about institutional VCs, as well as some of the larger players out there like Google, VW, Ford, and many other OEMs. And so that growth, I think, is obviously much more concentrated on different layers of the stack, whether we're talking about level 2 or level 3, conditional autonomy, or talking about full self-driving cars in terms of L4, L5. And so this would be a much more mature market versus some of the other markets we look at, referencing some of the technologies in deepfakes, where obviously the problem is there, or we're starting to become much more widely recognized amongst the private sector, government, and media. But starting to really see what the use cases could look like and how do we start forming different companies or entities to help combat these growing problems. And so a much more quickly growing market, but obviously a lot less capital behind it right now.
Terrific. So we're now covering the landscape about deep technology, and we also address this issue about growth. How do investors think about deep tech? We presented this fascinating commercial opportunity and some intellectually interesting research. How does an investor distinguish? How do they source deals? How do they think about valuations? How do we do that?
So at least how I view it is I like to separate them into two categories. There's the science projects and there's the actual projects that have commercial applications. And then I have to figure out within the commercial applications, is the timing correct? If the timing's correct, then I just have to satisfy. And what I mean about timing is there a business case that closes? Does this product have a customer or a base of customers that can sustain a business around it? The science projects are good to follow. For example, there was a guy that pitched me a warp drive that could take us from here to Mars in like 3 hours. Again, that's a science project and I'm not investing in that, even though I would love to have that. So I'll keep an eye on it. But when it comes to timing, does the business case close? And then if the business case closes, the most important part is the team. Can these people execute on this? And the best example I can put forward is a deal I led in 2019, the first part of the deal, the first part of the seed, Orbit Fab. And since then, based on my assumption of the team, is like the reason I had the conviction to do the deal. They've gone on to raise a Series A, and they have Lockheed Martin and Northrop Grumman both invested after we came in. So that's how I view essentially the valuations. It's, you base it on market and then you have a growth of the market as well. So by the time it exits, it's essentially somewhat of a binary outcome.
Terrific. Terrific, Tarek. Who wants to be then talking about deal sourcing? How do we evaluate these deals?
Sure.
Where should they come from? How do we think about valuations around deep tech? Because these have a different metric than the profiles of other sorts of ventures.
Sure, Eric. I think the challenge is,
Niall.
yeah, sorry, just to jump in. At an early stage, valuations are random. I don't care if it's a consumer product or an enterprise product. You just don't know. I mean, so obviously most venture capital or investors would do convertible notes and assume a later valuation. It's probably the best way to go. But I would just say that the way to get to the answer of, is this investable? Is this, it's the standard way you look at any startup. The founder, the product, really the market opportunity, if it's really there, and then, you know, obviously traction if it's early stage to see if they're moving in traction. So you know, sector regardless. You know, the interesting thing is I'll just, and I have nothing against blockchain, but often, you know, 3 or 4 years ago, blockchain was a rage, and it was a solution without a problem. So certainly they solve certain things, but there was already great solutions out in the marketplace that didn't need that. And so we always have to look at, is the market ready? And is it solving something where the technology can be there? And we've seen lots of examples where it's too soon, you're right on the crest of the wave. And our job really as investors is to do the due diligence in those spaces.
You know, I think of this in the context of basic investing principles, where we can get sucked into the intellectual fascination by some of these problems and find ourselves with a portfolio of solutions in search of problems, right? You have to start with the customer problem that is painful. And that may require, like in our case, it may require some very sophisticated technology from some, we'll say, brilliant computer scientists plus some brilliant mathematicians. But we did not come at it from the place of a solution looking for the problem. We looked for problems. Who else wants to talk about the deal sourcing? How do we the best way for family offices to find deals and evaluate those deals?
I could speak a little bit around that. I think being connected to a number of different accelerators is always helpful, and making sure that you have those relationships where, you know, if a company is doing 20,000 a month and you want to get in early, well, before they hit 100,000 a month, which can happen overnight, right? With the right partnership, that you get in there and you have that opportunity. The other thing, and frankly, this is a product that our team built internally because we couldn't find a solution for it, is leveraging artificial intelligence to manage the entire process. So for example, if you go to driven.capital, about halfway down, you'll see a green button that says startups, upload your docs here. It takes like maybe 10 minutes or so. And it's actually using artificial intelligence and natural language processing, not only to help keep track and organize all this, but you get a fundability score. You know, when we're getting, 100+ pitch decks a month, it's a great way to be able to use this technology called AutoVet. It is available, by the way, for family offices. So definitely worth checking into. Being a serial entrepreneur turned investor, at first I was skeptical. It's like, hey, you know, if the VC can't, or the family office can't take 20 minutes to see my pitch, you know, I don't want. But then from the other side, efficiency and organization, you know, it's a great way to keep on top of that. So,
thanks, Nick. Any last points on deal evaluation? As I have another question I want to move on to. Sahil, looks like you have a question, and then Tarek.
Yeah, I'd love to just quickly add, I think for family offices looking to get started in this space, I second working with accelerators. I think the demo days and getting to meet other investors there is a really useful way to start building a heuristic for how to evaluate these deals, how to start looking at early stage, since often we've seen family offices talk about SpaceX or a large logo in a certain area, whether it's materials science, life sciences, or somewhere else, and then wanting to figure out how do we start looking at things and start to benchmark these companies' progress at various milestones. So highly recommend getting to know other investors, other players in the ecosystems, other founders who can help direct you into the right companies and other companies that you might be looking to explore, or other themes.
Perfect. Thank you, Sahil. Tarek.
And then the last point on deal sourcing, I think the best strategy I've seen, at least with my LPs, is they like to partner with multiple smaller fund managers. Historically, if you look at smaller funds or even emerging funds, they tend to outperform existing and bigger funds. From a dollars to dollars perspective, but I would partner with them, take a nominal LP stake, but then you get the best deal flow from all those fund managers, and then you cherry pick the best ones and you follow on into those. So a lot of my LPs are either like later stage VCs or family offices that they maybe invest 250 grand into our fund, but then they'll invest 2 or 3 million into our deals individually through co-investment rights. And then lastly, I think the thing that people overestimate or underestimate is how you treat the founders you pass on. You treat a founder that you don't invest in well, he will refer you more business and bring you the most deals. And that's how most of our deals come to the table, from referrals from not only founders we invest in, but founders we pass on.
Terrific. Thank you, Tarek. I can say from my perspective, we took family office money from a very, very big family office, and we did that quite consciously because of this ability to dig in deep with us. We know that some endowments have historically gotten outsized returns because of their willingness to research a particular domain, and that's represented by the investors here and obviously by the operators, have expertise in a particular domain, and that differentiated information can provide, of course, a path towards above market returns, which I think is perfect place for family offices to be investing. Let me move on to another question then. The buyers of deep tech, that might be a different type of buyer than for off-the-shelf tech where speed of execution is front of mind. When we see technologies in whatever sector, they can just be in consumer, they could be like a Clubhouse. In enterprise, they could be just responding to regulatory events. Each of those may not be based on deep tech. So in deep tech, who do we think about as the buyers? Consumers, corporates, governments, perhaps? And that's both for the product and for M&A. Who wants to start with that? I'll start with that. I can say, so we've done both government applications where we had a large aerospace engagement with the US federal government. And the reason the US taxpayer paid so much for the F-35 is because we could not, as taxpayers, take what we learned from the F-16 and just bring that data over. This sort of data infrastructure I talked about earlier in logistics, in transportation, it also manifests itself in manufacturing in this particular case, because you have to retain the meaning, the semantics, while you transfer that data from a heterogeneous data source. That particular application in avionics could cost lives. So we found a government application for that. In the commercial sector, I've already given examples. So for us, we would say both. Obviously, the government's not going to be acquiring our firm, but any customers, there's both applications. So who wants to talk about where the applications are for deep tech? Bala.
Yeah, so when adopting like deep tech, right? Typically, these enterprises would have to look like 2 years or 5 years outward, in terms of what they want to adopt and like sort of grow into as a incoming technology, and that is some of the challenges that we within deep tech or like emerging technologies face when trying to sell a solution, and then we're often looking for the early adopters who are like hard to find, and so unless some technology becomes mainstream, it becomes hard for us to actually sell it to an enterprise and say, okay, come and like, take a look at this. And there are very few, what should I say, people who experiment or like, go into some kind of a proof of concept or R&D kind of an approach, to new solutions and new technologies. And they're the ones who are like, sort of willing to actually take a chance and try the product out.
Yeah, Eric, can I please add to that real quick?
Please, check.
So I don't think, our customers are 85% former military guys. They don't really care about if it's deep tech or shallow tech or high tech or low tech. They just care that it's a tool that works. I think the problem with a lot of deep tech is that the actual technology is very challenging. So to make something reliable, to make something work is one thing, but to make something reliably work every time is another. So our approach is always simplicity is reliability. So we don't want to show off our engineering prowess. We rather go after common sense. Understand the customer's problems and just try to solve them. It's really that simple. What are the problems, right? And if deep tech can be of help, then utilize whatever advanced technology we have available to really get the ROI that the customer is looking for. Our customer is just looking for saving money and having to deal with less people to manage, less headache.
That totally makes sense, Eric, Jack, for what you said, because it doesn't really matter. At the end of the day, they're looking for simplicity, right? That the end user, I remember my brother was CEO of a large utility in Arizona, spent $80 million on SAP, and then he spent twice that much of Accenture to install it for the whole company. And at the end of the day, it was worse than when he started. And what I always keep thinking of, these guys, the big enterprise software companies, they're slower and less nimble. And if a new nimble solution comes in and solves it and makes it easier to use without the complication, and all these people that did it, they'd export all the data into an Excel spreadsheet anyway to do their real use of it. So I always think, what can you do to keep them engaged and make it the end user obviously much simpler? But sticking to the theme for us, it's corporates. Corporates would end up buying these startups, and they would roll them in because they've solved this big whatever issue they have, in many ways. So,
so what I hear is we can think about this as contextual. What does the end user need? Do they need deep tech? Do they need shallow tech? So that it's contextual about whether deep tech is appropriate. I also think that we can have these technologies be sold by themselves, or we can be thinking about what businesses are enabled by these terrific technologies. I know in our example, we automate away a lot of the stuff that some core engineers do, kind of vocational level IT currently at very big dollar amounts, very big budgets. So who is the customer for that? It's hard to say. Tarek, I think you had opinion about this.
Yeah, I think how my team and I look at this is a lot of these companies that we are investing in tend to have the ability to go public. You're going to see an increased market for public companies that work around the space or robotics industries in the coming years, in my perspective. We had an exit last year of a space company already. It was called Made in Space, and they were doing in-space manufacturing, and that was a roll-up. That roll-up is now going public. So I definitely think that, historically speaking, you don't have public space companies. You have the big primes, but I think there is going to be a market for a lot of these. I guess you consider them deep tech companies.
Terrific. Now, in our last few minutes, then, how would we summarize how investors should be thinking about deep technology, evaluating deep technology deals? What's the takeaway for investors? We talked about market size, we talked about space, we talked about the oceans, we talked about terrestrial level deep tech down to the math. What's the takeaway for investors evaluating deep technology opportunities?
I would say blue ocean. It's wide open. Technology is in its infancy. Everybody thinks things have been done, but we haven't even started. So I would just say, opportunities are going to be out there for the next 50 years, 100 years, no problem.
Yeah. I would say very quickly that they should look for technology that's addressing an existing market rather than a technology that's addressing a market that doesn't yet exist. It's better to disrupt an existing market that already have demand. You can quantify that market really well, and you're able to see the ROI of the impact of that technology, so you can quantify it. So the customer can quantify it. The investor is able to use that calculation to figure out just how successful this company will be in terms of addressing that market.
I would say rather than deep blue ocean, I'd say deep space, blue space, whatever you.
Tarek has the
Right
bumper sticker, not blue ocean, but deep space. Yeah, I'm interested in any other perspectives that come up, but I will say this is the perfect place for family offices to play, maybe the only place, because if it's not deep tech, it's easy to replicate, and you're betting on a different type of risk, which is execution risk. You just need speed of execution, and that's a dangerous place to be. Markets can move fast, technology can move fast. So I'm going to say this is the only place to be, is in deep technology. Who wants the last word?
I'd love to just piggyback off of what you just said here, Eric, because I echo that. I think if you're new to this asset class, it's very tempting sometimes to invest in recognizable consumer logos or products you might want to use yourself, or enterprise SaaS where you have some forecasting ability. But I think venture really works well in deep tech because the multiple expansion you can see here when things go well can be exponential. And I think for those who are looking to navigate it, again, really work with trusted partners, start wading your way into the waters gently. But I think once you get hooked onto it, it's a whole nother type of asset class when you get comfortable and become one of the go-to players.
Yeah, that's a big thumbs up. What a fantastic summary of the panel, Sahil. Thank you very much. Looks like we have Marty back at the podium, and we can hand it back to you, Marty.